name's Scott Caithness. I'm the Managing Director of Hawk Resources. We're an ASX-listed mineral exploration explorer with projects in Utah in the US and Brazil and Western Australia.
Right, the triumvirate. Scott, good to see you again, sir. I'm in your neck of the woods-ish. I've got maybe a 3-4 hour flight involved, but in Australia at the moment. But we thought we'd take the chance to kind of catch up. You raised some money recently. Obviously, good to get that away. But what were people buying into?
Well, look, I think they're buying into the near-term catalyst for us is our copper gold project, Cactus project in Utah in the US. But I think they're also excited about the new acquisition that we've taken on, which is the Olympus Scandium project in Western Australia. So they're probably, I think it's a combination of both of those at this particular point in time. We also have the lithium in Brazil. But that's for us a little bit on the back burner. They're relatively early stage projects and need to be worked up.
Okay, well, look, let's kind of have a frank conversation around the kind of business model. For companies of your size, having dual track growth models are interesting conceptually, but with a kind of limited amount of capital, you've got to be really smart with that capital allocation. It's got to drive value and attributable value from investors. So you've got Cactus, which I presume is the main kind of value driver, and Olympus is the sort of optionality play. I mean, maybe you could, in your own words, break down how you think of them.
Yeah, look, I think you probably summed it up in a nutshell. I mean, Cactus is near term for us. So we've done quite a bit of work on the project over the last 12, 18 months. We've modelled up the old Cactus mine, which was mined between 1905 and 1920. No mining since. And what we've done is we understand the characteristics of it in an exploration sense. So we know what we're looking for. So basically, we've identified 5 targets at Cactus, which we're about to start drilling. So we're going to be drilling in Cactus in December. We're in the sort of final stages of getting permitting, and once we've got that, we'll obviously do the groundwork necessary and get the drill rigs out there. We've got a drilling company lined up. So that's our near-term catalyst. And then the scandium is something that we've picked up as being great optionality going forward. It's an area that wasn't actually explored for scandium in the past. It was explored for copper, nickel, PGEs, cobalt, and a bit of gold. But in the course of the work that they did, they assayed soils and also RAB samples for scandium using handheld PXRF, and they got significant scandium anomalies. So it's a very large scandium anomaly in soils. And there's also drill holes, RAB drill holes, that got significant scandium. And when I talk significant, best RAB hole, 11 metres at about 930 parts per million scandium. So that's certainly the grades that you need for a primary scandium deposit. Okay,
we'll come back to the scandium in a minute. I can see perhaps that the younger investors might be a little bit more excited about that. But in terms of base metals and the kind of size of the market, copper seems to be the play, sitting slightly behind the precious metals. But can we remind the audience of some of the historic grades which have been mined, and maybe some of the historic grades achieved after it stopped mining, if you don't mind?
Yeah. Cactus, the old Cactus mine is the only one that there's historical production records for, but the district itself has a number of deposits. So there's Comet, Cactus, New Year's, Purity, Coburn. There's a number of historical mines in about a 1 kilometre to 2 kilometre stretch through the district. The old Cactus mine itself mined about 1.3 million tonnes at just over 2% copper, with about 0.4 gram per tonne gold credit, and also about 6-7 grams per tonne silver. So it was quite a good grade. And there's been a series of exploration programs done over the area post-mining. Most of that work was done in the 1960s, where there are about 33 drill holes drilled into the Cactus Comet area. Look, there are intersections there that go 5 metres at 6.7% copper, sitting within generally a zone that will go anywhere between 20 and 40 metres at around about 1 to 1.5% copper. A lot of the drill holes that were drilled in the 1960s were not assayed for gold, so we don't know what the gold credit is. And look, then there has been some more recent exploration work, which was done by Hawk and also by Rio Tinto, because we farmed the area out to Rio Tinto for a few years, and they were looking for large-scale porphyry coppers. Our target is not large-scale porphyries. Our target is a smaller breccia-hosted mineralisation or intrusive-related mineralisation. So not really a Rio Tinto target. Look, they actually drilled a hole through one of the breccia pipes, through Cactus breccia pipes. They intersected 42 metres at 1.9% copper and 0.6 grams per tonne gold within a larger 70-metre intercept that went 1.1 copper and 0.3 gold. So there are quite a number of really significant drill holes. There's about 12, 13 drill holes that have been drilled into it that grade greater than 1.4% copper. They have intersections greater than 1.4% copper. A number with 3%, again, within broader zones that might grade 1.4. So really good historical grades.
Yeah, I mean, for sure. And I think that's the main attraction here is the good grades, not just in copper, but that contribution from gold is significant. Certainly, if it's recoverable from the network. So tell me this: how do you take that data and try and put together not just a kind of drill program, but a drill program with an end in sight? You're explorers, you're not mine builders. So how do you kind of start piecing this puzzle together with the first 5 million money that you've raised at the placement recently?
Look, I just make one further point. You touched on the gold with the gold credit. I mean, one of the other pieces of work that we found in the old data is Newmont had the project in partnership at one stage in about 2004 at the Comet deposit, where we don't have historical production data. They actually drilled some drill holes that got up to 26 metres at 1.5 grams per tonne gold from surface. So again, we're sort of putting that together. So we've basically got a two-pronged attack with what we're doing. We've modelled up Cactus, right? The historical mineralisation. We know that there's significantly more mineralisation left in the ground than what was mined in the past, and grade is a little bit lower than what was mined in the past, but that's based on historical drilling that was not a JORC compliant drilling program or anything. It wasn't a systematic drilling program. It's putting together the data that was built in the late 1950s, some in the 60s, some in the few holes in the 70s, few holes in the 2000s. It's sort of like putting all this together. But we know that the deposit has got, we know what the geophysical response is. We know that there's good geochemistry. We know what the geology is, the structural settings. So what we've done is we've identified 5 targets that are similar to Cactus through the district. The largest of them have potential for significant tonnage. So in terms of the geophysical anomaly, we've got some that are identical to Cactus and some that are chargeability anomalies as opposed to resistivity anomalies using IP. So the chargeability anomaly, which is the Copperopolis target, is huge. I mean, the interesting thing about Copperopolis is we got up to 1,000 ppm copper in soil sitting above it. And there's a historical drill hole that was drilled off the chargeability anomaly, the geophysical anomaly, that intersected 30 metres at 0.2% copper, but it was just off the side of the anomaly. So the target itself is not actually being drilled. And it's if you look at the volume that the geophysical anomaly occupies, we're talking hundreds of millions of tonnes of volume of geophysical anomalies. So it's a large-scale target for us.
Okay, I mean, just carrying on your point in terms of trying to understand the kind of tonnage grade range that's implied by the exploration targets at Cactus, etc. How do you go about again piecing this together? I'm just sort of very conscious that you've got to be working to a specific goal and idea and hypothesis, not just randomly drilling. So what's the thought process?
The basis of the drilling program is we've identified the geophysical targets, and then we've ranked the geophysical targets on the basis of surface geochemistry, soils. So we're the first company that's actually done soil sampling over the top. We know that, for example, Cactus, the old mine, where over the top of Cactus, we get soils up to 0.9% copper. We know over the New Year's prospect, which we drilled late last year, and we got intersections of up to 30 metres at 1.3% copper. We know that the soils sitting over the top of that go up to 0.3% copper. The best soils, and that's over known historical mines. So there's a bit of ground disturbance. You would expect that there's a bit of mineralisation over those. The Copperopolis target, as an example, we've got a very large geophysical anomaly. We know that there's a hole off to the side that was drilled in 1974 that got the 30 metres at 0.2% copper. And sitting above it, we've got up to 1,000 ppm copper. That's the third highest soil geochemistry sample that we've got in the district. So, outside of the existing mine. So it's actually a really high priority target. So we've gone and we've ranked them on the basis of we've got some evidence of mineralisation on top of the geophysical anomalies, because we're not just randomly drilling geophysical anomalies in the district.
And so when you say we're ranking and prioritising in terms of the geophysical anomalies at Cactus, Copperopolis and CZ, how do they compare in terms of scale and signature?
We've got the Cactus target, which consists of two targets in itself. We've got extensions to Cactus, the old mineralisation and the old mine at Cactus. And then we've got a separate target, which is about 200 metres further to the northeast of Cactus, which we refer to as WASP, but it's basically part of the same target. So they've got identical geophysical anomalies to the old Cactus mine. Then we've got the CZ target, which is also identical geophysical signature, and it's got soils sitting up to about 350 ppm copper sitting on it. Now bear in mind the background for copper in the district is around about 60 parts per million copper. So 300 represents 5, 6 times district background. Copperopolis is a slightly different target because instead of it being a resistivity low geophysical anomaly, it's a chargeability high. So it's the same technique. It's just one saying this is chargeable. So in our view, that has potential for, our interpretation is that has potential for disseminated type sulfide mineralisation.
When you're looking at the kind of resistivity lows and chargeability highs, and how do you kind of work out the kind of correlation spatially across those targets?
They basically, the geophysicist does modelling on the results of the survey. So they come up with a target. They come up with a model, a 3D model out of it. So they can work out the dimensions of the anomaly. They can work out the depth to the target. They can work out the dip of the target. So you can specifically aim your drill hole to hit the sweet spot, or what you hope is going to be the sweet spot within that target. So, and some of those will be near surface, some of them will be deeper. Obviously, if the results are deeper, there's a little bit more variability about, what it could be. But at the same time, you can't sit there and go, it's definitively this. The only way you're actually going to find out is by drilling it. So, I could sit here and say, well, Copperopolis I think it's got potential for disseminated sulfides, and it may well be that's the cause, but the sulfides might be copper rich, or they might just not be copper rich. It just depends. But it's got 1,000 ppm copper in soil sitting above it, so I'm much more optimistic that is a real target.
Okay, so the geophysical inversion accuracy varies depending on the host rock type, and so I guess to that end, in terms of the depth range of the initial holes and I guess drill method, between RC and diamond. I mean, how do you play that?
Yep. Some of our targets are, some of our drill holes are going to be as shallow as 150 to 200 meters. So we expect to hit the target quite close to surface. A couple of them are much, much deeper. So getting down to 1,000 meters with some of them, but some of that too just depends on where we can drill them from, because we have topographic factors that come into where we can site the drill holes. So in a couple of cases, we could shorten the hole if we could get into a better location, but the cost of ground preparation to get to that location, we're better off to just drill another 100 or 2 meters on the drill hole, really, because it will cost us more for ground. And
in terms of getting that kind of data validation on the historical assays, the kind of pre-chalk assays, I mean, what was the QA or QC do in terms of that validation? And are you going to help them out with some additional kind of data validation drilling?
Yeah, look, with the older near surface drilling that's been done, we've got, this is the second prong to the attack with Cactus. We believe that there's also some potential for near surface mineralisation. So the older holes that were drilled in the 1960s, the 33 holes I referred to earlier, they were only drilled to around about 100 meters maximum depth. So a lot of them are quite shallow. And we believe from the old data, all we have in the old data is assays. We don't have any drill logs. All we've got is assay data. And obviously the assay data, it was done in the 1960s. It's not subject to the same QA/QC. There was virtually no QA/QC back then in terms of procedures and of what they did with those. So we have to go back and check. And part of what we're doing now is we're modelling up the historical data, near surface specifically, because we've also added in the Comet Gold results to that now. And seeing what the mineralization looks like near surface, and we will be designing a shallow drilling program, it's top 50 meters, to see what's happening with the copper and gold as well. So that's the second string to what we're doing at Cactus. So we've got these other targets, which are obviously a lot deeper. They're based on geophysics, and then we're going to put the modelling together for the near surface potential of that as well.
And how do you piece all this together in terms of trying to understand or confirm mineralization continuity? Rather than having sort of satellite pit type profile. Again, where do you sort of focus the capital, the cash, the drilling in terms of saying, well, this could be the starter pit, this could be the hub, as it were. Because I'm just intrigued about how companies of your size, you're explorers, right? You're good explorers. You got the basis of something quite good there, but you've got to get there quite quickly. To demonstrate the quality, don't you?
Look, in terms of what we're doing with the deeper targets, the geophysical targets that are supported with the geochem, we've designed 2 holes into each of those targets. So we're not going overboard. We've got to make sure that we actually find something with that work. So we've got encouragement with the exploration results we've done, but the real test is a successful drill hole, as you know. So obviously, if we hit something that's significant, well, we keep drilling. The targets are large enough in themselves that they are potentially standalone deposits going forward. But the other side, again, coming back to the near surface mineralization, right? That near surface mineralization represents quick, easier cash flow. So if we're successful with delineating a near surface mineralization that's copper gold rich, particularly if it's oxide, which it quite possibly will be based on the results we got from the Rio drilling last year, where we got up, as I say, up to 30 meters from surface of copper oxide mineralization. Then, that represents near-term opportunity.
And what are the things? I mean, operating in state by state, it looks very, very different in terms of permitting timelines, and all the other kind of risk management factors that you have to hone in on. Can you tell us about your sort of timeline assumptions? Things like, how many pads, how do you permit the number of pads that you get to use, and how quickly does the environmental component come into it?
Yeah, look, in terms of our drilling, for the drilling program that we're doing now, the statutory period to receive a permit once you put your application in is 30 days. So we submitted that application probably about nearly 2 weeks ago. So I'm expecting that we'll have the permitting in place before the end of the month. If not, it would be very early December. So permitting has not been a major problem for us. I mean, you have to get archaeological surveys done, but that just identifies old rock walls or something that might have been related to the historical mining that they regard as significant. So in the Cactus area, there's a few old kilns, and they're pretty much intact. We just have to ring fence those off and move off to the side if in the chance that our drill site was exactly the same, and that's not an issue for us, really.
Okay, permitting good, drilling, you know what you're chasing and getting after. In terms of this $5 million, where does that take you through to? What are you going to be able to talk to the market about with this $5 million?
Obviously, our next step is to tell the market we're actually starting the drilling program. So that's our next step. Look, in terms of assay results, generally I work on notionally 8 weeks, 6 to 8 weeks for assay results. So if we manage to get the drilling going in early December, and as I said before, we think we're on track for that. basically we should start to get results certainly in the first quarter next year, because the drilling program will continue through Christmas into the first quarter of next year. It won't all be done in December. We've got about 12 holes designed at the moment for the targets. So it will effectively we'll start to get results back towards probably March. Initial results, maybe a little bit earlier if we're lucky. And then the results will continue to come through well into the second quarter.
Okay, and given us obviously a past producer, there's a we'll call it a restart project. There would have been some met work done. Are you going to base your work on that, or will you introduce your own kind of metallurgical assessment as well?
Yeah, look, we'll start if we get good results, we'll have to start doing metallurgical work as well as part of an ongoing program. So, you know, if we've got a target that looks in, obviously trying to get some early met work done once we've got a few drill holes to confirm the target, then that's what we would look at walking down that path. There's been no real met work done in the past on any of the work that's been done, because all the work that has been done in the past has been very much exploration work. Yeah, a few drill holes, a couple of drill holes here, a couple of drill holes there. There's no historical data on metallurgy from the work that was done in the 1960s. Yeah.
So tell me this, before we kind of dash over to the world of scandium, how are you finding it in terms of, you know, the team coming from Rio Tinto and Century Mines, and et cetera, you know, big boy stuff, you know, done at this level, decision making, are you finding it quicker, easier, and a bit more entrepreneurial? I mean, how's life down here with us?
You mean us compared to how Rio went about it?
Yeah.
Look, I mean, I was really excited to get this project back. I know Rio had it, and I mean, they explored it for porphyries. Their porphyry exploration was not successful from their perspective, and I really thought that there was always a great opportunity for smaller, higher grade deposits that really were not suitable for Rio Tinto. So I was very excited when we got the project back, because I looked at the old historical drill intersections and I was going, gosh, yeah, these are fantastic intercepts. Nobody, you know, even Rio didn't drill a deeper hole underneath the Cactus deposit. And so we're sort of looking at it going, there's a great opportunity here. We don't need to find 1 billion tonnes at, you know, 0.5% to 1% copper. You know, if we found half of that, we'd be happy. Yeah, look, no, it makes it a lot easier, and it's great to be in a position where we've raised the funds and we can go forward with the drilling program. I mean, we got encouraging results out of the New Year's drilling we did last year, which was verification work of the old holes, and you know, to get, you know, 20, 30 meter intersections of 1.3% copper and 0.8% copper oxide from surface. I mean, that was pretty encouraging. So one of our targets in this program again is to follow up that and see if we can get down deep extensions of that of primary copper as well.
And do you, obviously, when you were Rio Tinto for Dante, etc., it was a very different balance sheet you're playing with. Are you having to sort of again understand how you get to decision making points quicker with less money? How are you finding that?
Well, you have to. I mean, I guess you're always constantly weighing up. You're not weighing up what's nice to do and what you might like to do. You're weighing up what you have to do. So there's a very different approach to it. Obviously, the luxury of working for a large company and having a budget and being able to test your ideas is great. But I mean, I think since working in the junior sector, I think one of the things I've realised is why it's often the third, fourth, fifth company that is the one that's successful in the junior space, because what happens is the first one gets the opportunity to do a couple of drill holes before their investors lose patience, and then they move on, and then the next one comes through exactly the same. And look, the ideas from each geologist might be a little bit different, and then the fourth one comes along and they manage to drill a hole in the right place. And it was there all the time, but you know, each time there was not sufficient funding in most cases to be able for the company to continue. And that's the difference with a big company, because a big company will sit there and go, I'm going to drill 10 holes into this, and they can afford to drill the 10 holes. And so they have the luxury of being able to do that. and give it a solid test each target if they really think that it's worthwhile. So, yeah, smaller companies are a lot more focused on doing what you have to do, not what you would like to do necessarily.
Yeah, I think there's a real balance in that agility that the junior market demands of you because there's less money around, but also having to make, and I always refer to it, that you need to be more efficient with the way that you spend money. And I'm just wondering what you draw from big company procedure and process and structure, and not wasting your money in the junior space, which a lot of, I should say, it's the third or fourth ones that seem to be the beneficiaries of getting after an asset. But we'll talk about that another day. Let's talk scandium. Obviously, you kind of give us an outline of what's there. It's obviously much earlier stage. It's an exciting commodity for sure. Remind me again, what exactly do you know at the moment? Because you've got some XLRF scandium data, but how do you start to certify that?
Look, the Olympus project's in Western Australia. We've picked it up with an option arrangement. So we're going to be going out and doing some repeat soil sampling. So what we've got out of the work that's been done in the past, as I mentioned, it was not explored for scandium in the past. It was explored for platinum group, nickel, cobalt, and gold. In the course of the work that they did multi-element PXRF analysis of soil samples, and they also did PXRF analysis of RAB samples. Bear in mind, again, the point I'd make is it was not being explored for scandium. So even the RAB drilling that they did a few traverses of RAB. It was not for scandium as a target. It was for other commodities. So what they identified was a 4 kilometre by 7 kilometre scandium in soil anomaly that grades greater than 500 parts per million. And there are zones within that grade greater than 1,000 parts per million, with the maximum soil grades going about 1,200 parts per million scandium. In the RAB drilling that they did, there are 4 RAB traverses that were drilled that are relevant for the work for the area that we're looking at, and about 24 RAB holes in total on those 4 lines. None of the lines were in the 4 kilometre by 7 kilometre soil anomaly. So one of them was just outside, just on the western margin of the anomaly. It got intersections up to about 5 metres at about 940 parts per million scandium. And then there was another line that was drilled that was on a spot high scandium anomaly, which is out on the eastern side, which got intersections up to 11 metres at about 930 ppm scandium. So to put a perspective on the grades, scandium's worth about a bit more than twice as much as silver at this point in time. So it's worth about $3 to $3.5 million a tonne on the Shanghai Metals Exchange. So it's a very high value commodity, but it's also small volume commodity. And the reason it's small volume is because it's all produced around the world as byproduct at this particular point in time. It's not produced, there aren't primary scandium mines. There are a couple of projects there's 2 or 3 projects in New South Wales, which probably the most advanced is by a company called Sunrise Energy Metals. They report their resources at 2 grade cutoffs. One is 300 ppm cutoff grade, and the other is 600 ppm cutoff grade. Their resource at 600 ppm cutoff grade is about 1.7 million tonnes at a grade of about 660 parts per million. So they're focusing on their high grade, and that's advancing. Their tonnage for the lower grade cutoff is about 50 million tonnes at about just over 408 ppm scandium. So notionally, we're looking at it going 7 kilometres by 4 kilometres at greater than 500 parts per million scandium. We're in the right ballpark. The important part about Sunrise is that they've just signed an agreement with Lockheed Martin in the US for offtake of their scandium. So things are advancing on the scandium front because it's an in-demand commodity.
Yeah, no, and a point's well made. As a byproduct, it's kind of hard to kind of call the market, and maybe that doesn't make it easier to understand what the pricing at the moment silver has been in the same count very few pure silver plays out there as well. But just trying to understand what you understand of the mineralization that you're seeing, that you kind of described that 7x4 corridor. Is this sitting in some kind of ultramafic intrusive? Is it laserites, calcrete bound? And is it and how does it sit there? Is it just sitting as a sort of blanket style mineralization? Is it easy to guess at?
The answer is it's hard to know at this point exactly what's there because of the small amount of work that's done. But we believe that based on the magnetics, we believe that it's sitting above a mafic, ultramafic unit, which is part of the Giles complex, which is in that part of the world is a dominant unit. And also the mineralization itself basically sits from surface. So it's sitting in the laterite zone at surface. So the 11 meters that I mentioned in that drill edge section is 11 meters from surface. It's basically, it appears to be a near surface blanket. The RAB holes that were drilled on the traverses, all of them are mineralized and at grades of greater than 300 parts per million scandium. And the RAB holes are 200 meters apart, and there's 4 holes. So the RAB, those 2 that I'm quoting you, but there are another 2 RAB sections, basically cover 800 meters in each case. So at the moment, we're sitting there going, our interpretation is that there's this blanket, effectively a near surface blanket that is enriched in scandium. And the RAB traverses at the moment are suggesting that that's 800 meters by 800, each one is about 800 meters long at this point in time. And those RAB holes, they're on separate targets. It's not like they're all sitting right next to each other. So there's no clearly defined, here is a zone of, an area of 1 kilometre by 1 kilometre of anomalous scandium. It's just one RAB line, and then 1.6 kilometres away, there might be another RAB line, etc., on separate targets. So it's really, we're judging it on the basis of, we have a 4 kilometre by 7 kilometre highly anomalous soil anomaly that's got no RAB drilling in it whatsoever. And we've got some RAB drilling that's just outside of that on separate targets that has got a highly anomalous scandium in it. So we see obviously the first step for us in terms of a work program is to go and repeat the soil sampling that was done in the past, and also try and collect some soils where the RAB samples were done, RAB drill holes were done, and try and verify the presence of the scandium with lab assays. That's the first step, which is a very quick program. It's probably not much more than a week's work on the ground.
Right. Okay. Well, let's kind of park that up for now. Let's see when we speak next, how you kind of are advancing that, and how you spend your money on that one. For me, I think the big prize is obviously in the US with this copper and gold that you're chasing. So do me a favor, Scott, stay in touch with us. Let us know how you get on with the drilling. If you're about to start next month, it's exciting times, and timing is everything in this market, isn't it? So we'll speak to you soon.
Okay. All right. Thanks very much, Matt.